Hello, and welcome back to Investment Research, your home for in-depth equity analysis. Today, we're taking a close look at a name that has been on everyone's radar, SoFi Technologies, ticker symbol SOFI. This fintech disruptor has had a roller coaster of a year, and we're going to break down today's price action, zoom out to the bigger picture, dig into the fundamental bull and bear cases, and look at what the technical charts might be telling us. Whether you're a long-term investor betting on the future of finance or a trader looking to capitalize on the volatility, there's something in this analysis for you. So let's start with analysis for today, closing week 17, October 2025. SoFi closed the session at $26.77. This was a positive day, up 17 cents, which translates to a gain of 0.66%. While not a massive move, it's a solid green day, and in the world of trading, the context behind the numbers is everything. The volume for the day was 373,523 shares. Now, for a stock like SoFi, this is a relatively healthy volume figure. It's not the explosive 100 million share days we see on major news events, but it's enough to show genuine market participation. It suggests that today's move, while modest, has conviction behind it. Let's dissect the intraday story. The stock opened at 26.10, which was actually a gap down from the previous close of 26.60. However, it quickly found its footing. The low for the day was just a bit lower at 26.01. This level, right around 26.0, acted as a clear floor. Buyers stepped in almost immediately and defended it. From there, the stock rallied throughout the day, hitting an intraday high of $26.92. It couldn't quite break that $27 psychological barrier and hold it, pulling back slightly to close at $26.77. This price action tells a bullish story for the day. It shows that despite a weaker open, the dip was aggressively bought, and the momentum was to the upside for the majority of the session. The fact that it closed near the high of the day is a sign of strength. Now let's zoom out. A single day is just one data point in a much larger narrative. The 52-week range for SoFi is incredibly wide, from a low of $8.60 to a high of $30.30. Our current price of $26.77 is sitting firmly in the upper echelon of that range. This isn't a beaten down stock trying to find a bottom. This is a high flyer that has seen a monumental run up over the past year and is now consolidating near its highs. The journey from $8.60 to over $30 was fueled by incredible optimism around the fintech space, the successful de-SPAC merger, and most importantly, the narrative of SoFi becoming the all-in-one super app for finance. The key question for any investor or trader looking at it now is, after such a massive run, is there more fuel in the tank, or is the stock priced for perfection? To answer that, we have to look under the hood at the fundamentals. What is SoFi? For those unfamiliar, SoFi's vision is to be a one-stop shop for your financial life. They operate across three distinct segments. First, their lending segment. This is their legacy business originating from student loan refinancing. They've since expanded into personal loans and home loans. This is a high margin business and has been their primary revenue driver. Second, their financial services segment. This is the key to their super app ambition. It includes SoFi Money, which is a cash management account similar to checking and savings, SoFi Invest for trading stocks and crypto, the SoFi credit card, and SoFi Relay, a tool for credit score monitoring and budgeting. The strategy here is brilliant. Acquire a customer for one product, like a personal loan, and then cross-sell them into these other stickier products. This creates a powerful ecosystem, or what management calls the flywheel effect, drastically lowering their customer acquisition cost over time. Third, and perhaps the most underrated part of their business, is the technology platform segment, which is primarily their acquisition of Galileo. Think of Galileo as the Amazon Web Services of fintech. They provide the back-end infrastructure, the digital plumbing, for many other fintech companies and neobanks to issue cards and manage accounts. This is a B2B business that provides a steady, high-growth, recurring revenue stream that isn't dependent on SoFi's own consumer brand. With that business model in mind, let's build the bull and bear case. The bull case for SoFi is compelling. It hinges on a few key pillars. First and foremost is the potential approval of their national bank charter. This is the holy grail catalyst. Right now, SoFi has to partner with external banks to hold deposits and fund its loans, which costs them money. With a bank charter, they can use their own member deposits from SoFi Money to fund their loans. This would dramatically lower their cost of capital and explode their net interest margin, sending profitability soaring. Every headline about progress on this front sends the stock flying for a reason. Second is the flywheel effect we just talked about. They are proving it works. In their latest earnings report, they showed accelerating member growth and, more importantly, accelerating adoption of multiple products by those members. The more products a member uses, the less likely they are to leave, and the more valuable they become to SoFi. Third is Galileo. This segment is growing like a weed and provides diversification. Even if SoFi's consumer business faces headwinds, Galileo is riding the secular tailwind of the entire global shift to digital finance. Finally, you have a top-tier management team led by CEO Anthony Noto, the former COO of Twitter and a former partner at Goldman Sachs. He is a respected visionary leader who is executing on a very clear plan. Now we have to be balanced. What are the risks? What is the bear case? First, valuation. SoFi is not a cheap stock by any traditional metric. It trades at a high price to sales multiple and is not yet GAAP profitable. A lot of future growth, including the bank charter, is arguably already priced into the stock. If there are any stumbles in execution or delays in that charter, the stock could see a significant correction. Second, competition is absolutely brutal. In lending, they compete with every legacy bank. In investing, they compete with Robinhood, Schwab, and Fidelity. In cash management, they compete with Square's Cash App and PayPal's Venmo. SoFi is trying to fight a war on multiple fronts against giants. Third, macroeconomic risks are real. The student loan moratorium has been an overhang on their core student loan refinancing business. While that is temporary, a rising interest rate environment could potentially dampen demand for personal and home loans down the line. Finally, like many high-growth tech companies, there are concerns around stock-based compensation, which can dilute shareholder value over time. So with the fundamental picture laid out, let's turn to the charts for the traders out there. From a technical perspective, SoFi is in an interesting spot. The intraday low of $26.01 now serves as a very minor immediate support level. A more significant area of support would likely be found around the $25 mark, which has been a pivot point in the past. A break below that could signal a loss of the recent momentum. On the upside, immediate resistance is the intraday high of $26.92. A clean break and hold above $27 would be psychologically important and could open the door for a retest of the recent highs. The ultimate target for bulls, of course, is the 52-week high of $30. Traders should be watching key moving averages. Is the stock holding above its 50-day moving average? This is often seen as a key indicator of a healthy uptrend. A break below it on heavy volume would be a warning sign. Volume is also key. We want to see volume expand on moves to the upside, confirming the trend, and shrink on pullbacks, suggesting that the selling is not aggressive. So, what's the final verdict? How should you approach SoFi from here? It really depends on your time horizon. For the long-term investor, the story is not about today's price of $26.77. It's about whether you believe in Anthony Noto's vision and SoFi's ability to execute over the next 3, 5, or 10 years. Do you believe they will secure the bank charter? Do you believe the flywheel will continue to spin faster? Do you believe they can become a top financial institution? If your answer is yes, then you may view these consolidation periods as buying opportunities for a multi-year hold, understanding that there will be significant volatility along the way. For the short-term trader, SoFi is a momentum vehicle. The key is to manage risk. The daily chart shows a constructive setup after today's bullish action. A trade could be structured to go long on a break above the $27 resistance with a stop loss below the 25.25. 26 support zone, targeting a move back toward the $30 highs. However, you must be nimble. This stock can turn on a dime based on broader market sentiment or a single news headline about the bank charter. In conclusion, SoFi remains one of the most exciting and polarizing stocks on the market. It offers a clear disruptive vision backed by strong growth, but it comes with a premium valuation and significant execution risk. Today's action was a small step in the right direction for the bulls, showing resilience and a clear appetite from buyers on any dip. What are your thoughts on SoFi? Are you a long-term bull, a cautious bear, or a trader playing the swings? Let me know your price targets and your thesis in the comments section below. If you found this analysis helpful, please hit that like button and be sure to subscribe to Investment Research for more deep dives into the stocks that matter. As always, remember that this is for educational and entertainment purposes only and does not constitute financial advice. Always do your own due diligence before making any investment decisions. Thanks for watching, and I'll see you in the next video.